Alright, yo, what is up, guys? In today's video, we're going to be going over my favorite model that has generated me over 6 figures in profits alone. So this model is actually called the unicorn model, and it consists of a breaker block that is paired with fair value gap. Now, if you don't know what a breaker block is, I recommend you head over to ICT's channel and go watch a brief video about breaker blocks so you can better your understanding during this video. Okay, so the unicorn model looks basically something like this, right? You have a high, a low, a higher high, and then a lower low displacing through that previous low, leaving an imbalance and breaker block behind. Now, this is a bearish example, so for a bullish example, it would be vice versa. We would get a low, a high, a lower low, and then a higher high displacing through this short-term high, leaving a fair value gap and breaker block behind. Now, most of the time, you'll get a retracement back into either the fair value gap or breaker. And what I've learned from my backtesting is that you want to enter from the closest PD array. Now, what do I mean by that? So let's say the fair value gap is lower than the breaker block, like in this example here. You would want to enter from the fair value gap, as you risk missing the move if you decide to get a better entry from the breaker. And this goes vice versa. Let's say the breaker block was lower and the fair value gap was higher. You'd want to enter from the breaker block, as this is the closest PD array. Same goes for the bullish example. Let's say the breaker block was higher and the fair value gap was lower. You would want to enter from the breaker block. Now, you can always enter from the fair value gap. However, you do risk missing the move, guys. And I've actually had this happen to me a few times where I've put my limit orders on the fair value gap. The breaker block was here. Fair value gap was lower, and price tapped into the breaker block and shot up straight away, and it never gave me an entry at the fair value gap. So this is why I recommend that you enter from the closest PD array. However, it is preferable to always enter from the fair value gap. Okay, so now that you know what a unicorn model looks like, let's go over some criteria that you should follow when you see this setup. Okay, so first things first, we want to see a sweep of liquidity. So this can either be buy side liquidity or sell side liquidity, it doesn't matter. Alright, so the second criteria that you want to see is a displacement in the opposing direction, creating a market structure shift. So as you can see, this low here, price comes down, displaces through this low. This would be your market structure shift. And the third thing would be a retracement back into one of these PD arrays. Last criteria would be to target the next drawn liquidity. So if there's some equal lows down here, this could potentially be your next drawn liquidity or an imbalance. Okay, so now that you know the basics of this model, let's hop into the charts and go over some examples. Just a quick reminder, guys, before we get into the video, the live signals room is still available. The prices have now been updated to $30 a month. So congratulations to anyone that secured their spot at $20 a month. So if you guys are actually serious about getting your trading to the next level, I'd highly recommend you click that link in the description and secure your spot for only $30 a month whilst that price is still available. You get access to my exact exits and entries whenever I get into a live trade. So that includes my stop loss, take profit levels, full transparency. But yeah, the value inside this group is absolutely crazy. We only took 2 losses this week, netting over 85 handles profit, which is roughly around 300 ticks. So we're closing out yet another week in profit, guys. But yeah, we are absolutely smashing it inside the live signals room. The members inside of there are making consistent profits every single week. So yeah, make sure to get in there. And remember, also my entirely free Telegram group is also in the description. And this is where I actually post my daily analysis, chart markups. There's a lot of free value in this free Telegram group. As you can see, I post some trade breakdowns in there as well. But yeah, there's a ton of value in here, guys, all for free. So make sure to get in there if you're not already. Anyways, let's get back to the video. Okay, so let's get into example number 1. This is going to be a bullish example. So first things first, what you want to do is you want to mark out your buy side and sell side liquidity levels. So this can be done on the 15-minute time frame. Now, once you have those levels marked out, you're going to hop down into your lower time frames, such as the 1 minute or the 5 minute, and look for a sweep of liquidity. So let's wait and see how this plays out here, guys. So price has come down. We've swept sell-side liquidity. So that is criteria number 1 met. Now the second criteria that we want to see is a displacement above a short-term high. So in this instance here, this would be our short-term high. So we would mark this out and we want to see a displacement above this high. As you can see, price has displaced through this high here. And here is the unicorn model, right? So we have our low, we have our high, lower low that has gone into liquidity, right? Has digged into the liquidity, taking out all the sell stops. And now we have created our higher high, displacing through this high here. Now this is going to be our breaker block, the last up close candle. That is your breaker block. And see how this fair value gap here is paired perfectly with the breaker. Now since there are 2 fair value gaps in this case, we would enter from this one as this is the closest PD array. And obviously your stop would have to tolerate this risk here. So if price were to come down and tap into our breaker and fair value gap here, you wouldn't get stopped out, right? So in this case, I would put my stop just below the displacement candle's low. That's a very good risk that most people can tolerate, right? So I usually tend to risk around 25 handles, and your next draw on liquidity would be this high here, okay? So this is a 1 to 4 risk to reward, very good risk to reward ratio. Now, one thing I want to make very clear for you guys as well, we are actually in a 950 to 1010 macro here, right? So this is the silver bullet macro, and what I like to do with the strategy is I like to pair the unicorn model with the silver bullet macro, okay? It works like a dime, guys. So not only do we have this high probability model, we also have a macro that is most likely going to push price higher during this time, okay? So we want to enter usually between 950 and 1010, and you don't want to be holding your position no later than 11 AM New York time. Let's wait and see if we get an entry here. Okay, so there you go, price would tap you in long. And let's see how this plays out, guys, okay? Just going to skip this forward. Okay, price runs up, boom, TP would have been smashed right there for a nice 1 to 4 risk to reward with very, very little drawdown, guys, right? So in this case here, you only had literally 4 handles of drawdown, okay? Perfect. As you can see, the TP would have been smashed at 10:30 AM your time. You would have entered at around 10 o'clock, so you're not in that trade for a very long time. 30 minutes maximum. Some of my trades are shorter than this, usually around 5 to 10 minutes. However, some days you can get longer trades, which are 30 minutes long, right? But yeah, guys, that is example number 1. Now let's go over a bearish example. Okay, so first things first, what you want to do is mark out your swing highs, of your swing lows. So this could be your buy side and sell side liquidity levels. Once you've done that, you want to wait for a sweep of liquidity. So let's wait for buy side to be swept here. Okay, buy side has been swept. Now you want to see our unicorn model forming, okay? So as you can see here, we've created a high. Now we're going to create a low here, and I'm going to anticipate price to create another high and then displace lower. So let's see if we get our unicorn set up here, okay? All right, so as you can see, we had a high form, a swing low, and a very shallow run on buy stops here, but it did create another high, okay? As you can see, this high is higher than the other one, so this is still valid. And now we get a displacement towards the downside. Now this is a A+ setup for me, guys. Absolutely lovely. This would be your fair value gap here, okay? And your breaker block in this case would be this candle here. Notice how the breaker and fair value gap is overlapping perfectly, okay? I'm going to remove this writing for you guys because it's a bit in the way here, but as you can see, the breaker and fair value gap is overlapping perfectly. So you can always take your short entry off of the breaker and put your stop above the high. So in this case, it would be a 300 stop. However, I usually put my stop just above the displacement candles high or low, depending what direction you're trading. And then you target the next one liquidity, which would be the sell side here. So that's an easy 1 to 3 risk to reward. In this case here, I'm actually going to enter off the fair value gap, right? Because it looks so clean. I want to get my intro to the fair gap. We also have 950 to 1010 silver bullet time macro. It doesn't get any better than this, guys, right? So this is actually a 1 to 5 risk to reward, and you're only risking 13 handles. If you want to be safe, cool. Put your stop above the highs. You're risking 25 handles. That is still a free risk to reward. I'm going to keep my stop above displacement candles high, and let's see how this plays out, guys. So there you go. You've been tapped in short. Let's see how this plays out. Okay, and it looks like price is melting straight away to RTP. Get a little tracement. Okay, and wow. So your TP would have been smashed here. You've secured yourself 70 handles, okay? Crazy, crazy trade, guys. Anyways, that is going to be it for today's video. I hope you enjoyed. And if you got some value out of this, be sure to leave a comment down below and let me know. Make sure to subscribe, leave a like. And lastly, if you guys are actually serious about getting your trading to the next level, click that link in the description to join the live signals room where I also teach this exact model step by step. It's only $30 a month. We've also recently added a lifetime access option for a one-time payment of $250. However, prices will be going up very, very soon as the members inside are making consistent profits every single week from our signals. So yeah, be sure to secure that price at $30 a month, and I will see you in the next one.